Alright, and good day everyone. Welcome back to my YouTube channel at Illumination Hub NG, where we teach financial accounting. Before I continue on this video, please kindly subscribe to my YouTube channel and also click on the notification bell so that you can have access to any video I'm going to be dropping later on. And for those of you who have just been started following us, who have not been part of previous videos that we've shared, kindly check some of the videos online. And also, I'm going to be dropping the link to those videos, the previous videos that we had before this one. Okay, now in the last video that I made, I discussed how to prepare the trading profit or loss account, which we also know as the income statement. And we also treated some adjustments. The question is what you can see on the screen here. And we're also going to be dealing with this today by preparing the balance sheet or statement of financial position. For those of us who don't know what a statement of financial position means or a balance sheet, the statement of financial position states the financial status of the organization as at the end of the financial year or the end of the accounting period. Okay, now this shows the assets and the liabilities as well as the capital being introduced into the business. Okay, it's a final account, okay, that shows all the assets, that is things that the organization own at a given financial year in relation to what the organization is owing to others. Okay, and in this case, we're going to be talking about those current assets, the non-current assets. Okay, we're going to be talking about the capitals. We're going to also be talking about the profit end that we're bringing down from the income statement. And also, we're going to be talking about the long-term and short-term liabilities. Okay, so we're going to look at these, and there are various ways by which you can prepare your statement of financial position. For those who are still involved in preparing the accounts using the T-shape, okay, I'm going to show you how to do that, and also how to do it using a vertical method. Okay, so let us go ahead and jump into this video and let us check out how to prepare the statement of financial position, or we know as the balance sheet. So right now I have the question here on my screen. Okay, so let me move on to the pen. So let me click on that. Okay, so okay, so I can go ahead and do the work now. So let us start with the T format. Okay, so let's call this balance sheet. Okay, balance sheet. So I want to try and make this more clear. Balance sheet. Okay, so we have the two sides. Okay, we have the liability side and we have the asset side. Okay, we can call this non-current assets. Okay, non-current assets, or what is known as the fixed assets. Okay, so we can start here with capital. So if you look at the question, okay, the capital is, from what we have here, is 110,000. Capital is 110,000. Okay, you can go ahead and do that. Write that here, 110,000. Please ensure you write the headings fully, and also let your lines be straight and your calculations well presented. Okay, so this is just for explanation sake. Okay, so let us move on. So in our previous video where we treated the P&L account or the income statement, okay, we are bringing down the profit. Okay, let's say add. So here we're going to be add. So add net profit. So in the case of where we have drawings, okay, in the question we are going to be introducing that, but in this case we don't have any drawing. So let us, if we go back to the video, Well, let me see if the solution is still here. Okay, so you can see that I think I still have them here. Okay, so we have the net profit here already, and the net profit that we have there is 24,002. Okay, 24,002. So 24,002. So let's write that there. 24. So let's add that to the capital. 24, 24,002. So when we add this together, we're going to be having 134,002. Okay. So let's go ahead and what do we have next? Do we have any form of long-term liabilities? Long-term liabilities. So long-term liabilities, do we have any? Okay, when we look at the questions, I don't think we have long-term liabilities here. So what we have is we have sundry creditors, and we also have accruals. Okay, so in this case, we don't have any long-term liabilities, so this is not it. So we have current liabilities. Okay, so we have current liabilities. Current liabilities. So we have creditors. Let's go ahead and do that. We have creditors. Okay. I don't know if I'm not drawing this right, so let me just back this. Okay, so let's do that. We have creditors. The value of creditors, as you can see here, is 8,315. So let's add that 8,315. Okay, 15. We have accruals. Okay, accruals that we have in the question. Accruals. So let's go back to the notes to the account. Okay, so we have accruals of. So let's check that out. So let's add up. So let's go to the notes. Okay, here in the notes we have accrual. So this is our accrual here. These are the accruals that we have here. That is 250 plus 25. Okay, so which is 275. Okay, so please go. I'm going to post the link to the previous video here so that you can follow what we've been doing. Okay, so you can see how we prepared the POL account. Okay, also we have the addition is 275. Okay, so that is that on that. So we also have our assets. Our assets. Okay, so we have non-current assets. So let me scroll down to the other side a bit. So our current assets we have. So let me try and see how far I can go with this. So our current assets we have. So our fixed assets or non-current assets we have land and buildings. Okay, land and buildings. The value of the land and building after depreciation is 58,800. So we did the workings. I'm going to show you that. 58,800. Okay. So we have motor vehicle. So this is how we got the land and building, because we have land and building here 60,000. Okay. And we have depreciation. Depreciation here as land and building 2%. So at the end of the day, we're going to take 2,000 off this. It's going to go 58,800. So 2% of 60,000. Let's get that. That's sorry, that's 1,200, please. Not 200. 1,200. This is 1,200. So once we take the 1,200 from the 60,000 naira, we are going to be left with 50,800. So for the motor vehicle, we have a net book value of 4,000. Okay, 4,000. So this is how we got that. The initial cost is 5,000, and we have a depreciation of 20%, which is 1,000 naira. Okay, so when we take 1,000 out of 5,000, we're going to be left with 4,000, which is the net book value of the asset. Okay, so the next one is we have our current asset. Okay, current asset. So current assets. So let's move on. So under current asset, we have stock. So the closing stock, as we have here, is 39,000. 39,000. Okay, so this is 62,800. 800. Okay, so 39,000 we have debtors. So after reducing it with the provisions, we have our debtors, as you can see here. Sundry debtors, where do we have that? Salaries. Sundry debtors, you can see that here. So we are reduced that with the provisions. Kindly look at the previous video, 29,447. 29,447. So we have what again? We have bank. We have 10,811. 10,811, as you can see in the question here, 10,811. We also have cash, okay? Cash. We have cash of 412. 412, as you can see here in the question. 412, okay? We have prepayments, okay? Prepayments. So the prepayments, as you can see here, are 27 plus 95, okay? That is 12. 122, okay? Prepayment is 122. 122. So let's add up. So we're going to be left with 79792. So when we add up, we're going to be left with 79792. Okay, so let's add that together. We should have 142 as 142,592. So we have 142,592. So when we add this up together again, we have 142,592. So this is how you're going to solve this question. You can see that at the end of the day, our balance sheet now balance. So for the vertical method, let me see if I can quickly finish up with that. So let me just go ahead and work on that. So using the vertical method, so the balance sheet, okay. So I'll see if I can meet up with the time. So we have the non-current assets. Okay, so let's go ahead. Let's see how far we can go with this. So we have land and buildings. We also have motor vehicle. Okay, we have 58,800. 800 plus 4,000. Okay, so that will give us 62,800. Okay, so we have current assets. Current assets, we have stock. That is 39,000. We have debtors, 29,447. We have bank 10,811. We have cash is 412. We have prepayment that is 122. So we're gonna have 79792. Okay, so let us move on before our time stops. Okay, so we have a total of 142,592. So for the liabilities we don't have any long term. We have current liabilities. Okay, we have current liabilities. Okay, we have what do we have? We have creditors and accruals. Creditors, we have 8315. Okay, we have accruals as 275. Okay, we have funded by we have capital that is 110,000. Okay, we have net profit that is